Welcome back to our YouTube channel, everybody. Today we have a very exciting episode for you. Lanny's put a lot of work and effort into building his July dividend stock watch list. So today we're going to talk to you about the 3 companies that are on his radar for the coming month.
Smash that subscribe button. Give Bert and I a nice thumbs up. It only takes a few seconds, and this definitely helps us reach more of you out there in the community with our financial education and what we're seeing in the dividend investing world. And I can't wait to dive in to my not one, not two, but 3 dividend stocks that I'm watching for the month of July.
Yep. Thank you, Lanny. So before we dive into the actual stocks themselves, we're going to talk to you quickly about the methodology of how we build our dividend stock watch list. We use the patent pending Dividend Diplomat's Dividend Stock Screener. We've put together over the years 3 simple metrics to help you find undervalued dividend growth stocks. So to start, the first metric, we compare the price to earnings ratio to the S&P 500. We love having undervalued dividend stocks. We're not going to pay an expensive premium for those dividend stocks. So to help us assess valuation, we compare the current price of the company to the S&P 500. To find these numbers, it's actually pretty straightforward. We take the current price per share, we divide it by the earnings per share. Earnings per share are found on Yahoo Finance using their average forward earnings. It puts together to one simple metric, the PE ratio. We compare that to the S&P 500, which is usually between 18 and 20. If it's less, undervalued. And we move it on to the next metric of our stock screener.
Yeah, thanks, Bert. As we all know, it's a very simple metric. It's the dividend payout ratio. And how you calculate the dividend payout ratio is the total dividends a company pays per share per year divided by that average analyst earnings projection. And again, this really tells you about the safety of the dividend and how it's very critical in determining for future increases as well. And we typically like that sweet spot of 40 to 60%, whereas they like to show that they return cash back to their shareholders, but they reinvest back into the business.
Yep, perfect. Thank you, Lanny. And the third and final metric on our screener is the dividend growth rate in the history of increasing dividends. We're dividend investors after all. We love looking at those companies that have shown their ability not just to pay a dividend, but increase their dividend over time. So we love looking at those dividend aristocrats that have increased their dividend for 25 plus consecutive years, those dividend kings, and any company that can just show their ability to grow and increase that number.
That's right.
Yeah.
You know what time it is?
What time is it, Lanny?
Let's dive into my 3 dividend stocks that I'm watching for the month of July.
Yeah.
First batter up, we got the duck, Aflac.
Aflac.
Oh boy.
Sorry.
Hopefully he doesn't say this throughout the video. Bert may be finding his second career there with that quack.
Yeah. Nope, I can promise you that's going to be the only time you hear that from me.
Ticker symbol is AFL. And it's no surprise here that they are a dividend aristocrat. And we all know, and we've seen Aflac. We know when there's a commercial on either the TV or on the radio. So it's a very well-known brand. And as we've seen throughout the pandemic or the coronavirus, is that most insurance companies essentially are providing returns or refunds back to members. And that's simply because their claims have been much less than what they anticipated. Therefore, they're giving even more back of their earnings, not only back in the form of dividends, but still back to the form of refunds back to their customers.
Yeah, no, it's been nice. I just got my refund check last week from my insurance company. It was great. Nice little extra cash in my pocket to put back into the market.
That's right. Now, Aflac, as of June 26, they were trading a little bit under $35 per share, I believe at $34.68. So to dive into that first dividend stock metric is the price to earnings ratio. And then looking at Yahoo Finance, the average analyst earning expectation is approximately $4.47. So taking that share price and dividing it by that average earning per share expectation, you actually come down to a significantly low price to earnings ratio of below 8.
Man, 8? It's a really low payout ratio. I mean, the market's more than double that since it's typically between 18 to 20. That's fantastic.
Right. And then not only did I compare it to the S&P 500, but we also compared it to a few competitors. And Bert, which competitors did I choose to compare that to?
Compared it to Travelers Insurance and Cincinnati Financial, one of the companies I've been buying a lot of over the last few months.
That's right. And here's the response to that is Aflac is at a price to earnings ratio below their competitors.
Yeah, I mean, based on that alone, I can see why you added them in there. So Lanny, that clearly passes metric number 1 with the PE ratio. Let's talk a little bit more about the payout ratio for the company.
Now, the dividend payout ratio for Aflac, as well as other insurance companies, they are usually significantly low. And obviously, as a dividend investor, you do like that because your concern and risk of the dividend or a dividend cut is far lower than another company. Now, Aflac pays approximately $1.12 in dividends per year per share. And at that analyst earning expectation of $4.47, you're looking at a very low dividend payout ratio of 25%.
Man, 25%. So that's way below not only our 60% threshold, but that's also below that sweet spot that we love, that 40 to 60% sweet spot. So clearly, as you can see, Aflac has plenty of room to keep growing their dividend going forward, and it has a nice, very large margin of safety as well.
No, you're spot on with that. And speaking of dividend, growth and having more room for dividend growth because of that low payout ratio, that's a great segue into the third dividend diplomat stock metric, that dividend growth rate. And Bert, Aflac's a dividend aristocrat, but how many years have they increased?
37 years.
37 straight years of dividend increases. Now, they're not going to blow your socks off with their dividend increase. It's usually in that 3 to 4% range, or slightly outpacing that inflation so that your dividend purchasing power stays strong. It's not like cash where, as we talked about earlier, cash is dead.
Yeah. But it's a nice amount. The company continues to increase. They've shown it for a long period of time that they're committed to increasing their dividend, again, which is huge for us during times like these, especially as the pandemic continues to trickle through the economy.
Right.
So I mean, hopefully you can easily see why this is the first company on the stock list. Lanny, I get it. I can see exactly why you added Aflac, and I myself have been adding small shares of Aflac over the last few months as well because of the metrics like these that we've walked through. So I think let's take a look at stock number 2 on our list.
It's about that time. Stock number 2, General Dynamics, ticker symbol GD. So who is General Dynamics? Well, they're one of the largest aero defense and defense companies in the world.
Yep.
And I think one of the biggest, obviously, within the United States. And GD trading at where they are with the valuation metrics of what they have, it's hard to not have them on your dividend stock watch list at this time.
Yeah. So I mean, I think we can just dive right in and start going through some of the metrics if you like.
Yeah. So we'll start with price to earnings ratio. Analysts right now currently project $12.26 on a go-forward basis in earnings for 2021. And they currently trade at $146.05. So shockingly, because they usually don't trade at these levels, their price to earnings ratio is below 12.
Man, yeah, that's way below the S&P 500. I mean, for a defense company, that's a fantastic PE ratio today.
Speaking of defense, they are very defensive on their payout ratio.
Yeah. Let's break it down. So they pay $4.40 of annual dividend. You divide that by the $12.26 that Lanny talked about for the earnings per share. It gives you a PE ratio of 36%. So it's obviously a little higher than Aflac, but it's still way below the 60% threshold that we use. And it's just on the cusp of hitting that sweet spot of the 40 to 60% range that we love to see.
Yeah, exactly. Because they're still in that lower part of the spectrum of the 0 to 100, and more specifically below the 40% window that we like to see, they have plenty of room for that dividend growth. And that's just what they did earlier this year. They actually raised their dividend in the first quarter of approximately 8%, I believe that dividend increase was. So combining that with all the other dividend metrics that they have, GD, deserves a spot on your dividend stock watch list.
You know what time it is, Lanny? Time for dividend stock number 3 on the watch list.
That's right. Let's get that intro. Let's bring them in. Let's get the red carpet out.
Roll it out, baby. We have the company that is not only a dividend aristocrat, they are a dividend king, and they are one of our top 5 foundation dividend stocks. Ladies and gentlemen, dividend stock number 3 on Lanny's watch list is
The one, the only, the good old, reliable Johnson & Johnson. Ticker symbol J&J. You know, we've talked about J&J many times before. They're actually one of our top 5 dividend stocks for your portfolio. And, you know, here they are, J&J. They're finally back on the dividend stock watch list because, you know, usually they're not blowing your socks off with dividend metrics, but right now they definitely deserve a spot. All right, now I'm diving into the 3 Dividend Diplomat stock metrics to see why they're actually finally back on my dividend stock watch list. The price to earnings ratio. Now J&J is actually trading at approximately $137.81 as of June 26th. Now analysts are projecting earnings of $9.05. Again, very simple equation here. The price to earnings ratio is actually below 16, Bert.
Man, below 16. That is a fantastic price to earnings ratio for Johnson & Johnson based on some of their historical figures.
Right. And I mean, it just gets better from here because, you know, though they're still down 13% from their 52-week high, their dividend payout ratio even sweetens the deal here because it's like in that beautiful sweet spot that we like. At a dividend, you know, payout of $4.04 per year, at analysts' projection of $9.05, that dividend payout ratio is at 45%.
Man, that is awesome. Finally, we have one that is right in that sweet spot, well below the 60%. Awesome room to continue growing their dividend if they want to. Then I can take over the third metric here, dividend growth rate and dividend history. We mentioned it already. They're a dividend aristocrat. They're a dividend king. This company has demonstrated year after year that they want to continue increasing their dividend. And much like General Dynamic, Lanny mentioned earlier, Johnson & Johnson has already increased their dividend during the year. Back in April, right when the pandemic was starting, Johnson & Johnson increased their dividend 6%, which was, again, fantastic news, and it was much needed as we were getting dividend cuts left and right from other companies. I know I was very pumped to receive that, and Lanny definitely was as well.
Oh, for sure. And, you know, again, it's a good way to also state, how many years does it take to be a dividend aristocrat?
25 years to be a dividend aristocrat.
How about being a dividend king?
Half a century, 50 plus years of increasing your dividend.
So that group is, you know, small and few and far between, which is why this one is so precious being in that Dividend Diplomat stock screener. And to give a little shout out to The Rock, finally, Johnson & Johnson has come back to the watch list.
I love it. I love it. So to conclude here shortly, Lanny took some time. He found 3 great dividend aristocrats to add to his July dividend stock watch list. Again, these are 3, but there are many of other potential options out there too. So as you've gone and done your research as well, let us know what you think about these 3 companies and what other stocks you're watching out there too, because we love to just learn more and see how many other ones are out there too.
And again, give Bert and Lanny here a nice thumbs up for the diplomats here. Smash that subscribe button. Thank you for checking in on Lanny's July dividend stock watch list. This is Bert and Lanny. Over and out.